Good morning, everyone. Welcome to the Modern Market, where we discuss every day all things to do with the modern market. That is the crypto market, the NFT market, and how to make some or a lot of money on the internet. Loaded up for discussion today, we have the SEC approving in-kind redemption for all spot Bitcoin ETFs. We've got 21 announcing 5,800 Bitcoin incoming from Tether. It's going to be the third largest Bitcoin holding company with 43.5K of Bitcoin, and Linea, the L2 announces upgrade, and Linea tokenomics. This is the one that is run very much by consensus or attached to consensus in some way. So very important for the ecosystem. So we'll discuss all of those important headlines as well as the general market movements and thoughts on the market as usual. Today, it's also a special show. We've delighted to say we've got One Football with us. Vince, the GM, will be joining us towards the end of the show for an interesting conversation, how they're bringing many millions of their IRL Web2 football fans on chain. So looking forward to partnering with them on today's show. Cannot wait to get into that conversation too. In the meantime, though, got Legendary and Bread with me. We've got we're ready to get into it. But just a reminder before we do, nothing that we say has financial advice. This market is very, very risky. We do not know anything for sure. So please do proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Wednesday. It is the 30th of July. How are you doing? How are you feeling?
GM, doing quite well. Month is almost over, which is incredible because more than half of the year is over, and that feels pretty insane. Like August is typically the time where I go on holiday and I start to get a bit like reflective on the year, and can't believe how fast this cycle has been progressing.
What have you started reflecting on?
My actions, my trades, what I did. I'm happy with my performance. I'm happy
positive, negatively, positive reflections, negative reflections, bit of both.
Yeah, I mean, a lot of that was also triggered by the conversation that we had yesterday on, is it the time to be more active again, in the sense of be more risk on with the more degenerate things, which we talked about yesterday, or is it just the time to chill and let the bets that you already have placed continue to run? So that kind of prompted my introspection yesterday.
Do you feel like you're winning in a bull market? Like that's always the question, right? Like numbers are going up across the board. Like everyone's kind of winning right now. And I think the common feeling is like, am I winning enough in an environment where everyone is winning a lot? How do you feel? Do you feel like you're winning enough? Do you think you're doing well relative to the market? Do you feel like you've captured enough opportunities?
That's two questions. I do well relative to the market. I do tend to track my portfolio performance versus BTC versus ETH, and outperforming that is kind of the goal, because if we can't outperform that, I can then also like just go back and hold the majors. The other question, am I winning enough? Yes and no, kind of. That was exactly the conversation that we had yesterday on the show, between Funky B and myself for like the 20 minutes probably of the show, 50 minutes of the show, whether it is the time to be more risk on, to place more degenerate bets. And my conclusion on that was to say, I'm happy with how I'm allocated in the majors. I'm happy how I'm allocated with the altcoin bets, like that sizing of 1 to 3% of the portfolio, which goes in individual trades. But I don't feel like I have enough on the long tail, the degenerate 0.1, 0.2% of my portfolio bets, in the same way how I had them running last November, last winter, with memes, with AIs. So that's the thing that I'm basically wanting to fix for the next couple of weeks or months or so.
Interesting. I just don't think it's the same market as then. I don't think those things exist in the same way. I know there are things that run, and we said like, okay, fine, Zora is now a thing, and there's some creator coins that will go from like 0 to 8 mil or 10 mil or something like that. But I just don't think it's the same market even still. Although there are obviously a variety of opportunities still on the table. Brett, what about you? How are things your side? What's going on?
I would say my portfolio is doing well for my activity level. As you guys know, I'm not a So I have several core positions. I would say my biggest winner right now is still identifying and jumping onto the Hyperliquid train before it got to out of the station. It's later than I wanted to. I think we had the instincts early on, and I just did not. One, I remember the conversations from 3 to 12 and 33, the first run, and I did not give it the attention that it deserved at that time, despite all of the movement. I regret that. I'm trying to stay aware of that. The next is I vividly remember whenever after it had done that run to 30s, it getting attacked during the jelly attack, and it going down, things being sketchy. I vividly remember this is the time you go all in. This thing is not going to go away. This is only going to strengthen its position. I got distracted. I identified it. I said it in my head. I just didn't do it. And then I watched it go up to 20s and 30s and eventually moved in. But I did not jump when I wanted to, and I wish I had, and I'd be doing even better than I am doing. But yeah, a lot of my trading, we'll say, or my bets to this point are mostly in just trying to ship mega. It's trying to make sure that this thing is in the best position to capture the long-term value that this industry provides. So on the trader side, I'm happy. I'm as happy as I can be for the level of activity that I do. And then just general positioning and everything else that we're doing, both modern market and mega. I feel like I feel good about that.
I got a question for you on that. You said, you focus most of your attention on shipping mega, making that the best thing you guys can make it. But also, you said you did well with Hyperliquid. I would say your portfolio is in a comfortable position. So obviously you put a lot of passion, effort, hard work into mega ETH. But if for whatever reason that wouldn't be the success you all wish for it to be, you wouldn't your financial portfolio wouldn't be ruined as a result of that. Let's put it like that. Does that take away some of the pressure that you have, trying to ship mega ETH to the best of your all's abilities, to have this cushion in the rest of your portfolio?
Yes, undoubtedly. I achieved the nirvana that is I have enough money to not have to worry about stuff. I don't have the lifestyle that needs a crazy amount of inflow. And my previous earnings, both in my career and then early crypto days, has given me the position. Frankly, I won't need money for a couple of years on my current trajectory. I just don't. So I don't need to take unnecessary gambles. It's kind of a love for the game, and then just trying to optimize where I can. So at this point, the purpose that mega serves is less a monetary one, although that is a component of it. And more of a intellectual stimulation, building inner peace situation, which is I enjoy.
It's an interesting question it's actually one of the interesting things I have to think about running modern market, which is how do you, and I think everyone comes into this battle in crypto, is how do you get hold of talent when the money is not the main thing anymore? Because this is the thing that happens, right? People make the money and they don't need to do anything. They don't need to join your show. They don't need to build the product anymore. They don't need to log in every day. How do you keep talent who don't need the money anymore? And I think the answer to that is to really lean into whatever core mission it is that you have, and lean into the side of the values and the vision and the goals, because you might be able to get some of the best people who are basically looking for purpose. Then it's if you're not looking for money, you're looking for purpose, right? And you can do whatever you want, and then they might choose you on the basis that you're doing something worthwhile, worth time. It's not worth money, because money doesn't matter anymore, but it is worth time. And I think, in a way, that is, money is time. Time is money. And making that investment is something I think about a lot in trying to even attract some of the best people to want to participate in the show and in other things. So interesting conversation.
Shit with cool people. That's my North Star.
Yeah, and exactly the aspect of the intellectual satisfaction that Brett mentioned. Honestly, for me, I couldn't trade all day. I enjoy the game, I enjoy the trading, but I feel I would burn out mentally, because it's not intellectually satisfying to just be clicking buttons. And having the show as this forum where I can chat with y'all for an hour on the things I find interesting and have good discussions. And seeing this thing also being something that's like interesting, attractive to a growing audience, that I find rewarding. And I feel like it creates a nice balance with the trading. It kind of allows me to then not be fed up with clicking buttons because it is not intellectually satisfying. Like, I don't know, we spoke about Yeet, like grinding out a casino airdrop is not a really satisfying thing. Hunting down protocols on Sonic, put 6 figures into them and farm an airdrop, which now only turned out to be worth a couple $100, is not intellectually satisfying. But yeah, the love of the game doesn't go that far for me to only be happy as a button clicker and trader. So I need more for my brain.
Yeah, good to have the balance and figure out the right kind of people you want to hang around with here. That definitely 10x's, I think, whatever it is that you choose to do, being around the right people 10x's that. So maybe we talk about those 10x's just as much as the other stuff. But getting into no 10x's today, we're going to get into the price action.
Can we quickly go to Funky with his hand up and then get into the price action?
Go on.
Funky.
Just real quick. First and foremost, I can't believe you said y'all. That just made my day. Put a smile on my Florida face. 2, this is exactly why I tune in for every day for like 2 years, because of the high quality conversation, the good vibes of people. And I'm sure that's for everybody else. Look at Steve, Cap, Oxy, all these people who show up day after day that are here. It's because of what you guys do and because of who you are. Keep it up.
Appreciate you, man. Appreciate y'all for showing up every day. Right, let's get into the other potential 10x's.
I don't even do y'alls. That's wild.
I went to UT Austin. Like, I was in Texas for my masters. I have to be yawling occasionally.
I mean, it's the first time I've heard you do it, but I'm here for it. I'm here for it anyway. Right, price action, and we get into the headlines. Bitcoin is flat at $118,000. ETH is down 1% to 3.8K. XRP is down 1% as well to 3.1. BNB is down a few percent, back under $800 just by a bit. Solana's down 3% to $180. Hyperliquid down 4% on a bit of FUD yesterday, down to $42. They did experience.
Did you guys talk about the FUD?
No, because it happened after the show. So do you want to touch in on it? What was going on?
I could probably leverage you guys a little bit. I've been distracted. Obviously, I'm still doing the on-site stuff. I know they went down for a few hours, and I saw some back and forth on that. Do you guys have the key details on like why it went down, how long it was down for?
Not specifically. I think the front end just basically stopped. The funding rate started going a bit wild because people couldn't trade properly. But beyond that, I don't know the
I'm gonna do a little research.
Details. Yeah. If you can find it in the meantime, we'll probably circle back and check it. But yeah, there's definitely a bit of FUD around that yesterday. We have Sui also down 4% to $3.80. So mostly red across the board on the major side of things. Also red on the meme coin side of things. We've got Doge down 4%, Pepe down 4%, Pengu down 7%, Bonk down 11%, SPX down 8%, back down to $2. Fartcoin down another 10%. Back to $1.10. Whiffs down 7%. So basically, you get the picture. Really red across the board. However, Pump is actually pumped back up 8%, coming off the lows, but still down at 2.5 bill, which is much lower than what people had hoped and expected, I imagine. So broadly red across the board there. Getting into the headlines themselves, we have SEC approving in-kind redemption for all spot Bitcoin and ETH ETFs. Legendary will explain what that means in a moment. We've got 21 announcing 5,800 Bitcoin incoming from Tether. Remember, this is a partnership from Tether, Cantor Fitzgerald, and SoftBank. This additional amount of Bitcoin will make it the third largest Bitcoin holding company with 43,500 Bitcoin. And then also we had Linea making this announcement on their L2. Their tokenomics is now live. I think the snapshot's been taken. ETH is exclusive gas token. 20% of net fees will get burned of ETH. Sorry, 20% of net fees will be used to burn ETH. 80% of the net fees will be used to burn Linea, the Linea token itself. So Brad will talk about what that means, how that functions in just a little bit too. So generally red day. Ledge, anything we need to know on the NFT side?
Yes, 1 second. Let me get that up on screen as well. There we go. Basically, also a rather red day for the major NFT collections. Pudgy's down 5%, Moonbird's down 3.5%. The exception being Bored Apes, which are up 3% to a 12.6 ETH floor. But apart from that, it is a small correction, I would argue, in the market. The thing that is not correcting, and we mentioned it yesterday, is CloneX. CloneX is still up 80%, 70% on the week, sitting at a 0.3 ETH floor. So people are not selling that often. Now starting to wonder if there will be some sort of, I don't know, community takeover, anything happening around that, because it feels unreasonable to see this sustain the price floor without anything happening.
Yeah, that's pretty crazy. Definitely concerned about that. That is one of my indicators, my warning indicators going off, if I'm being perfectly honest with everyone. Also, just one big sale, Hoodie Punk sold for $550,000 on Gondi. The floor for Hoodie Punks now is up to 700K. So that's pretty enormous. There was a period of time where I think it was as low as 300. So they've fully doubled up. I keep a very close eye on Hoodie Punks because when I was giving loans, they're one of the best loans to give, stablecoin loans to give on Gondi, because you can earn a ton, like 15% on pretty big size, I guess, right? Because if the value of the NFT is like 300 grand, then you can give 150 grand loan against a Hoodie Punk, and like at 15%, that's like a really, really meaningful amount that you're super confident on, because hoodies always trade significantly higher. And now at 700K, I'd be very interested to know what the kind of loan to value ratio is on Gondi, because if you could slide, it's a lot of money obviously, but if you could slide 200, 250 in, and you're kind of 33% loan to value. I don't think I wouldn't want to go as high as that, because the reason why you don't want to go as high as that is because the price has only just gone to 700K. You don't really want to get in at that loan to value thinking that is the real one, and then the market corrects significantly. You want to be at a level that is you're confident at before. But I always keep an eye on that. So good loan opportunities, I suspect, for punks at the moment as well.
Did you generally stop lending on Gondi because you said when I was giving loans?
Yeah, I've stopped at the moment because I thought there was a few liquid opportunities that I liked more, and I was a bit concerned about the dollar in general. It's like I don't want to earn yield on dollars because the dollar keeps going down against my native currency and against Bitcoin as well. So I wanted to have a little bit more in liquid, but I think there'll be a time, and I'm actually starting to rethink that again. I think I'm getting to the time where I'd quite like to participate in some of those again. I think people are getting too short the dollar. Look, on a long time frame, good. Be short the dollar. It's bad. It's not a great outlook. We know that already in this industry, right? Like, it's going to go down against Bitcoin for a long time. That is all of our positions most likely. But I think we're getting a little bit too much like that. And I think in the short to medium term, it could be nice to earn like those very significant yields. I think that was the one you've brought up, the one I think that I was lending against before.
Interesting. I just searched for the first hoodie I could find so we can share how this looks like on Gondi. But do you quickly want to talk through what people who are watching on video can see on the screen?
Okay, let's see. So this punk, what is this? 517 grand of debt. What? No way. Has this? Okay, you scroll down a little bit for me, please.
Yeah, principal was 497.5K at a 15% APR. Started on April 25th, and due date is in a year, and April 25th, 2026. Accrued 20K in interest so far, 55K left to pay. So that's a rather high loan to value compared to the hoodie floor.
Okay. Interesting. April. I don't know if these numbers are adding up for me. So 500K loan. Okay, maybe it was much earlier in the year when I was doing it. When I was doing it, this was you could do hoodie loans between 100 to 150. So I don't know how it's gone to 500 or 400 already. Yeah. Wow. Okay. So the hoodie loans, you're going to have to cough up a lot more, basically, I think is the learning there. That's going to be much, much more than I expected. But I mean, I wouldn't do 500. If the floor's just gone to 700, that's way too risky, in my opinion. You want like a much more comfortable loan to value ratio. That would be my thought. So that's that. Let's get into, just shout out to.
Hold on. I come back with bearing fruit from my adventures. So I did the Hyperliquid thing, right? So TLDR is that like there's the blockchain for most things. Most blockchains you can access directly through what's called an RPC, right? It's like a remote procedure call. That's like the nodes of the infrastructure or the ecosystem around a blockchain that actually serves up the blockchain information. Hyperliquid, because of its closed source nature and its small network, is basically, it has what's called a, well, not what's called, it's a database on top of it. And then you have an API that interacts with the database. So RPC is an API call basically to a blockchain. API is a call to a database, which sits on top of Hyperliquid. And that API thing, this infrastructure that sits on top of the very performant hypercore, right? You typically need something, whether it's an indexer or this thing that maintains information, market orders, whatever, and forwards it to the blockchain. That went down. So the underlying blockchain itself and all of like the RPCs, like if there were nodes that are actually doing that stuff was all fine. This service that ran on top of the blockchain, which served all of the front end requests from the UI, like the Hyperliquid homepage, all that stuff, and just like general traders, that went down for roughly 20 to 30 minutes. So for that entire period, no trader could actually like issue anything through that service. But the chain underlying like still was operational, did all this stuff as expected. So everyone was just gridlocked in their position for those 20 minutes or whatever.
Thank you very much for the explanation, Brad. The only thing I would, and also shout out to DA Sales in the Twitter comments. He just shared, or they just shared the screenshot explaining it as well from the Hyperliquid Discord, saying, yes, there was an issue with the API services for 37 minutes yesterday afternoon due to a significant spike in traffic. There was no hack or exploit. The issue was patched and further improvements will be made going forward. There will also be additional protections. Question, Brad, I don't know the answer to this. Was there any significant losses as a consequence? Like, did people have open positions? You know, people are trading with humongous amounts on Hyperliquid. Like, that would be the fear, right?
Yeah, obviously, if you're a low time frame trader, like you're at risk of getting. It's the same thing that happens like when Solana went down, right? The prices of assets continues to move even while you don't have access to things. You get liquidations if you're managing stuff. Like, yeah, that's it. So like, undoubtedly, people probably get caught off sides if they're a low time frame trader, like doing it minute to minute or whatever over there. And by the way, shout out to DA Sales, longtime friend of myself. Met him in the trenches of Cardano, actually. Good guy. So like that's the thing. I think the thing that like is of interest or note here is again like the particular architecture that is in place for Hyperliquid, right? Because Hyperliquid, the front end UI exchange is an application. The typical setup is that you have these applications for anywhere, right? Like it's GT or not GT. Well, GT if you're on MegaETH or Uniswap, whatever. They have a local instance of the database, or the database being the blockchain, like running a database. They have an indexer, pulls in all the information from the blockchain, keeps a local copy of it because it's much, much, much faster than going to the actual blockchain itself to get information, which is kind of sparse. It's like the setup is similar. What stands out to me is in this instance, had it happened in an Ethereum or a base or a whatever, like you can still call the chain directly with an RPC call and like liquidate a position, like you can do all this shit without the front end UI that is an application. And I don't know how much of that was available here in Hyperliquid's specific instance because of how close they've been with basically everything, which kind of negates the point of having a blockchain, right? The whole point is like you can go around all this shit and just go directly to the source of the thing, which here was operational 100% of the time. So like I should have had the ability in this instance of just like going directly to Hyperliquid core and saying, liquidate my position. I want to get out. I want to close out my shit right now. I don't care if the front end app is down. I wouldn't mind, like, I want to get out of here. I don't know that was possible here. And I think like this brings to light a little bit of like maybe the trade-offs that they've made
for sure.
And people should be aware of that.
Look, I think that's wise. I think that makes sense. I think if you were in very big positions, this was always the criticism of Solana for a period of time, right? It's like, oh, we can't trust it with certain types of positions that you might want to put on. And I guess from what you're describing, like if you're on the low time frame and you need access to your trades at all times in case something happens, yeah, like downtime is not okay. So fortunately, I guess we're probably not in that bracket of being so low time frame, but I can definitely see how if you were in that bracket,
We're not.
you'd struggle.
Yeah, and I just said one last thing. I don't want to equate this necessarily to something like, yes, both were downtimes, but like the structure is a little bit different, right? Like this is like if Magic Eden went down, all of the NFTs, all of the positions that you would have, like if your listings or whatever, all of that would exist on Solana the blockchain. So if Solana the blockchain was up, even though Magic Eden, which has a local instance of the blockchain, goes down, I can still go to the blockchain and like unlist my shit, list my shit, do whatever. I can go around the local instance here. And like when Solana went down, the chain went down. It's like you literally could not do anything. It sucked. And like Oracle prices could like fuck you up once it comes back online. It's like that was a different issue. Here, Hyperliquid, the app went down, and it still meant like everything that existed on the chain may not have been accessible.
Got it.
Which seems like an odd setup to me. Like you should have been able to access that stuff, even though the app itself was down. So like I think that I want some more clarity around that.
Okay. So good to get some initial thoughts here. Maybe we need to do a little more research to get to the bottom of it, but I think we've got the gist of the downtime yesterday. That's helpful to get to. Ledge, did you want to come in there quickly?
Yeah, I just want to say on the quick and short time frame trading, do you remember last cycle B when I was telling you that I was closing all my positions before I got on the plane because it was playing the game in such a degenerate way that I didn't trust not being able to monitor shit for like an hour or so?
Yeah, that was a different time. We're different human beings now. Don't need to. you can take a flight now without getting too worried. Right. Look, conscious of time today because we do have GM of One Football, one of the biggest worldwide media companies for football, coming on with us in just a bit. So let's hit the next set of bits of news on the roundup and get into the headlines quickly because we're going to have that conversation in 10-15 minutes time. We've got a bunch of stuff today, so I'm just going to rattle through them. First, Strategy bought Bitcoin again, unsurprisingly, 2.46 bill of Bitcoin at $117,000. So big buys there. Kraken seeks to raise 500 mil for an IPO valuation of around 15 bill. That's pretty important as we go into IPO season potentially, or as crypto companies want to realize their crypto equity at valuable levels now that the whole industry has been de-risked by the current administration. Tom Lee's Bitmine reveals $1 billion stock repurchase program for Bitmine. Got 180 Life Sciences announcing ETHzilla, which is a $425 million private placement to establish an ETH treasury reserve. Again, a lot of reserves here, right? We talked a lot about reserves. I think we're going to end up keep talking about them on a day-to-day basis. BTCS files a $2 billion shelf registration to use part of proceeds to purchase ETH also. So it feels like just back-to-back treasury buys or treasury companies getting set up. Slightly different. Yeet Casino passes $300 million in lifetime volume, at least a proportion of which is legendary. Hyperliquid experienced downtime yesterday as API goes down, trading affected for less than an hour, as we discussed already. Big news on the kind of IP side of things. I'm just going to check in the show at the same time. We've got Ugly Doll co-founder David Horvath joining Claynosaurs as brand management and consumer product growth in Asia. And David's with us in the audience today. I've always noticed David pop in. I interviewed him a long time ago when I was working with Chimpers quite a lot. Shout out to David and congratulations. That's a humongous hire for Claynosaurs out in Asia. He's super well versed in all of the IP and brand building stuff out there. So congrats to David. Fubar shares Circuit AI, which is an AI agent running on your existing wallets. I think that's super important. It was like a small bit of news that got out yesterday. Want to keep an eye on that because that could, in the same way that you don't want to force people to go and use apps in different places, if you can get it running in your wallets already, that would be cool. I thought that was a really cool idea. NBA Top Shot moments are available in Japanese vending machines. Thought that was interesting. And finally, Infinex integrated Hyperliquid EVM. So Infinex continuing to add more chains to their offering. That's the roundup, boys. We don't have a lot of time today. So is there anything you must say on any of these other bits of news?
I'll pass.
Yeah, let's just run through it.
Let's get it. Legendary, hit us with the first headline. I do think it's helpful for people to understand this,
Yes.
this wording and what the significance might be of the SEC approving in-kind redemption for spot Bitcoin and ETH ETFs.
So this is quite big news. As you said, the SEC is opening the door to in-kind redemption option for crypto ETFs. That typically means you have two ways how you can redeem an ETF. You can redeem in cash, sell you whatever ETF that is and get dollars back, or you can redeem in kind, which means you get the underlying asset. So say you have an ETF that, for the simplicity of the example, comprises of 3 stocks. If you were to redeem in kind, you get those 3 stocks exactly in the proportion how they were set up to be in that ETF. So in this case, this means you can redeem the Bitcoin or the ETH, which are the underlying asset of the crypto ETFs or of the crypto ETPs, exchange traded products, and that has quite some interesting implications, because A, it reduces friction. B, as an issuer, as a market maker, you have more flexibility when you manage the fund. And C, the most important thing, it's more tax efficient as an institutional investor, because you can defer taxes by redeeming in kind, because typically in a cash redemption, the ETP issuer must sell the underlying asset, that is BTC, that is ETH, to raise the funds for you to be able to redeem the cash, to redeem your ETF, to sell your ETF. And that is often triggering capital gains in the background that then are passed on to the shareholders. And if you redeem in kind, this thing goes away. So you basically can defer tax payments on that. And this is then only taxable when you ultimately decide to sell the underlying asset. So massive tax advantage as well. That probably is more relevant for the institutional investors than for the typical retail investor. But this is what makes it such a relevant headline, and that's probably not immediately apparent from the headline of saying SEC opens the door to in-kind redemptions.
Got it. So that's super helpful. So I guess the net effect is because of the more beneficial tax arrangements for in-kind redemption, it overall makes the asset class a more attractive asset class, because people can think, okay, well, I'm not going to get smashed when I want to redeem these things, right?
Yes, and there's also a second part to this, which wasn't that widely reported, which is that the Commission is also advancing other initiatives to standardize the treatment of crypto-based products. One of the things they're looking into is mixed ETPs, that is having an ETP that consists of both Bitcoin and ETH, which also is extremely helpful because it removes friction again. Say you want to have exposure to both, you can buy one single ETP, and then in an ideal world, if you want to redeem that, get both underlyings, BTC and ETH.
All right, this is what we're going to do, Legendary. I have ETF positions. We're going to do an in-kind redemption at the top. And we're going to get our actual tokens in our pockets. And then we're going to take loans against them. And then, therefore, we get the cash without actually getting the capital gains on the sell. And then we're going to let it ride to zero after we ride off into the sunset.
Beautiful.
So you're going to ride off into the sunset with dollars, Brad?
At the top, yes.
Okay, I'm down for that. I don't mind that idea at all. As I said, I'm
just saying this to put this out in the end of the ether, so that like down the road we're like, all right, guys, this feels a little frothy. We need to figure out our next plan. It's like, okay, I'll take a loan right now because like I'm not sure, like see what my LTV is. Maybe it's a little frothy, and like just like do that instead of actually just straight up selling.
Indeed. Look, interesting stuff. We got to get to the second headline. Oxy, I know your hand is raised on this, but we got to motor through the next few on this, so maybe you can come back in on a separate point. The next headline is 21 expecting to add 5,800 Bitcoin before planned listing, increasing its holdings to at least 43,500. Remember, this is the company that is a partnership between Cantor Fitzgerald, Tether, and SoftBank. And so this propels them into a position of being the third largest Bitcoin treasury company, which is obviously very significant. And therefore, you definitely want to have them on your radar as well. I don't think there's anything more to say on it beyond that. We spoke a lot about treasury companies yesterday, and I think we'll continue to speak about them because I think some of the positions that treasury companies have been taking, especially on the more speculative end, is getting incredibly risky. I don't think MicroStrategy or maybe some of these more solid Bitcoin ones, especially if it's backed by Tether, can have the same types of risks. However, the general treasury company industry has I've squarely got my eyes focused on that right now because you want to see the numbers and the risk as they're kind of ramping up. So that's the short point I wanted to make there. Brad, I think maybe it's helpful to get into Linea here and maybe talk through why Linea is interesting and maybe its connection to consensus, and then talk through their big announcement.
Yeah, so Linea itself is an L2 on Ethereum. That is a subsidiary or a subcomponent of Consensus, which is the creator of MetaMask. So like there's a lot of like really strong and obviously sharp links. So Joe Lubin is the one that created, like he's the founder of all this stuff, founder of Ethereum. So a lot of like really strong structural ties there. Unfortunately, they just have not seen a lot of adoption, at least within like activity levels in the L2 space. But they're trying to change that. So they just announced the upgrades to Linea tokenomics and some details around the L2 specifically. So some of the details are ETH will be the exclusive gas token, and they will do an 80-20 burn or 80-20 distribution of the burn that happens for any transactions on the chain, 80% going to a Linea burn and 20% going to Ethereum burn. The actual tokenomics themselves are interesting because it's the pie chart is just two slices. One is 85% for ecosystem allocation and 10% of that going to an airdrop. The other 15% is just for the consensus treasury with a 5-year lockup. The thing that is notable on top of that is that most of these L2 tokenomics are seen as just like governance meme coins, like worthless governance coins broadly. And they're trying to push against that. They say they're going to have a consortium, Linea consortium specifically, which is made up of Eigen Labs, ENS Domains, Sharplink Gaming, which obviously is the treasury company, ETH Status, and Consensus that will drive decisions of like allocation of those 85 or of the 15% treasury that they're reserving for themselves. Again, I'm not really too sold on this. I'm not going to be a buyer because I don't think good tokenomics make an ecosystem. And I think the ecosystem itself needs to show a lot of growth and a lot of activity to then give value to the token, right? I can have the prettiest construction, but if no one's actually using the chain, it's all worthless, right? So we've seen many stories like that. And it's that until proven otherwise for me here.
Interesting.
Go for it, B.
No, you go.
I think the tokenomics are pretty interesting on that one, but very much agree with that if you don't have the activity on the chain, on the ecosystem, tokenomics by themselves won't fix that. I remember back in the day before we ran the modern market, when we had airdrop season, V-Check and myself, we were farming Linea, and that back then was our way.
How many years ago was that? That was
like 3-4 years ago. We tried to get exposure to a potential MetaMask token, and back then I also remember MetaMask introduced the in-wallet swaps, where Beanie posted, famous investor trader, on the timeline that he burned $100,000 in fees just in the hope of a potential MetaMask token. We did farm XP, Quest to Linea, swaps, everything. So I'm quite curious to see if any of that will matter for the airdrop, which I don't really think it will.
They did mention LXP as a thing that is going to weigh into like how they allocate that 10% airdrop, and they did allude to future airdrops. So like the structure is there. It is pretty nice, but I would just continue to caution people that like the value of the thing is only going to go up regardless of the construction if like there's actual usage on the chain. And they do have big players, right? Like so Sharplink is a part of that. Joe Lubin is obviously on his bull post like arc right now. So there is a lot of stars aligning for the chain itself. I have not heard or seen or had any indications that like there's actual like natural growth there. No applications. The tech is good, right? They're doing the ZK shit. And I know Declan Fox, who is the guy who just recently promoted to like head the chain. He's a smart guy and he's very Ethereum aligned. So like all of that stuff is true. I just don't know if it matters.
Very interesting. Okay. There was a final point, I think, on the community side, Brad, where it was like, there's so many tokens, I guess, trying to really demonstrate that this is not an insider situation, like no insider tokens, 75% to ecosystem. and other stuff. I think maybe just from a personal perspective, and maybe you can give a thought here as well. Like in the end, when you analyze tokenomics, which is something we do routinely in order to analyze all these things, you kind of need to take the pie chart and then redo the pie chart in your own words, because people try to present things in particular ways. They try to guide you into thinking that the segments are the way they are. And there's an excellent article on this by Kobe where he explains through tokenomics and says, like, you know, here's one set of tokenomics, here's what you need to do with their pie chart, and you like write out all the tokens that are available to the team, when they're available. And in the end, it's actually a bit of a mismatch. It's not always the way that it's initially presented. I'm just saying, I don't know if that's the case in this instance. If you're going to analyze this further, that's always part of the exercise in order to properly evaluate any token coming to market. So
100%.
There we go. Thanks for that segment, Bread. Appreciate it very much. Now, as you mentioned at the top of the show, I think Bread is going to drop off. Thanks so much for joining us, my man. Delighted to say we've got Vincent Schauk, GM of OneFootball, leading football media company globally, where 34 million football fans are enjoying exclusive content all the time. Vince and I met a long time ago. It was back in Singapore. Great to have you, Vince, with us again. How are you doing? Great to have you with us.
Hey, B-Check. Hi, Legendary. Thanks for letting me join the show today. Yeah, you said it. Token 2049. So in crypto years, that's a very, very long time. So
Indeed.
a lot has happened. You know, great to be on the show today and be able to talk to you a little bit more about what happened in the last year.
Yeah, I mean, I'm super interested. I think first from the first perspective, I'm a big football fan. And the more I learned about the business, I think it was cool because you are super well integrated into the current like football ecosystem. And so I think that'll be interesting from the perspective that people want to know, like, how do you transition from like an existing successful company and get into the Web3 ecosystem? And as you said, we met a long time ago, and I think there's been an interesting journey for you from there to get to here, to where you are now. But maybe before we get to that stuff, like how has that, you know, if you're looking at that year, we met in September of 2025 in Singapore. How has this year been as a builder within crypto? Market's obviously way better than maybe when we spoke back then. So how has that kind of experience been for you?
Yeah, I think, I mean, this year is pretty much probably the most exciting one for me thus far, right? I mean, to maybe also give a little bit like of a background of what OneFootball is, you know, why you guys should care, or like what we do, right? So OneFootball is a media first company that has been established like 17 years ago. They started out like sending SMS as like goal alerts, you know, to fans, you know, to reach them and, you know, be somewhere in their pocket when they're out and about and want to learn a bit more about their football, the passion for football. We then, you know, when the App Store came, we were one of the first sports apps ever on the App Store. We were pre-installed on the Apple Watch, featured on the keynote. So it got really, really big early growth that we had. And then now we really have become kind of like the one-stop shop for the football fan, right? So given your preferences, the way you enjoy content in football, we take all of that and serve you a data feed, you know, that actually matters the most to you. And what's also unique about us is the you know 15 biggest clubs in the world, you know, like you know, FC Barcelona, you know, Man City, Bayern Munich, you name it. They're actually shareholder in the business as well, and they give us their content for us to amplify it, right? So what is super important is, I think, in the game, if you are not one of the big, you know, walled garden, you know, Metas or Google or whatsoever, you always need to pay access to get in front of your fans, right? And so the clubs come to us and they actually say, hey, you know, I want to activate my fan base. We know it because we have zero and first party data of these users. And then we help them to amplify that message. And that in itself is OneFootball.
That's really cool. And that was actually one of the questions I wanted to ask, because how does that happen? So you said you started like on SMS back in the day, like texting people alerts. At what point did you manage to get these huge clubs. And look, one thing I just want to put into context with people is we're saying football a lot here. We have a huge American audience, and I love American football too, but we're talking about the real football now. Talking about the real football, which is probably realistically a more global sport. And so when we're talking about the biggest clubs, we're talking about Real Madrid, we're talking about Barcelona, talking about Bayern Munich. So these top Spanish clubs, top German clubs. How did you what made them get involved? How do you get those deals signed?
Yeah, I think that's that has been a path that is different for most of the clubs, right?
Sure.
It kind of you had the initial start. I wouldn't know which one was the first ones. We had multiple conversations, but when football reached really critical mass, right? I remember I was here. I've been at the company for 7 years, so I really seen it scale up, right? And we expanded into Brazil, which is one of the craziest football markets, right? And a lot of really engaged fans. And so, the clubs realized more and more hey, we have all this content from the sidelines, just from practice. We don't have any place to actually show it, so how can we create a win-win situation, for a platform like OneFootball, which works like an amplifier, and then also for us to get more of the relevant content out. Because let's face it, you're not going to bayernmunich.com to get the latest news, right? You go to Google or some sort of aggregator in order to really be served what you want to focus on. And so, within that, we also, clubs are clubs. They're very big fans. So the business in the football industry is not easy, I can tell you guys, without revealing too much. But let's say they also saw a benefit in having a stake in the company, right? Because with their power and also their brands and their content and our distribution, it only makes sense for us to join forces together and bring them on board. And so I think it started with a handful of clubs, and then it expanded quite rapidly because it's kind of this case study that works. We have the numbers to back it up, and then other clubs followed, specifically smaller ones. And maybe one interesting caveat here as well is we are very big, one of the biggest streaming platforms for football, right? Also in pay-per-view in selected markets. So our strategy is more around serving tier 1 rights in, let's say, tier 2, tier 3 markets, like Serie A, in Germany. We have that, right? We distribute it because we know the Italian fans who are in Germany, or the Bundesliga fans who are in Brazil. You usually spend a lot of money to target, and because we have all that data and we can serve the fan right where they at. These partnerships are growing and growing. We, for example, have a Bundesliga pass in Germany, which is going really well. And sometimes people don't know this about us, but we've a very solid streaming infrastructure, and give the clubs actually a platform and the users as well to come together.
How do you find these niche markets? When you say you have Bundesliga fans in Brazil super passionate about football and obviously have their own clubs as well. How do you find out that there's a big enough German Bundesliga fan base in Brazil to make it worthwhile to serve streaming rights to them?
Yeah, that's a good question. So, I mean, we have an onboarding process where you start, you choose your favorite national team, you choose your favorite clubs, and then also players, right? And one thing I would argue is I think players are bigger than clubs and bigger than national teams, kind of that order. So we see a lot of loyalty when, players are moving around clubs, that actually the audience follows them here as well. I mean, through that onboarding process, what we do as well inside of the app is we have surveys. They're just super small, less intrusive. They pop up from the bottom, 1, 2, 3, thank you. And it's crazy to see how much engagement we get on these. And so by probing the audience, we know what the interest is, and then also to make the offer really appealing to them. Obviously, somebody in Brazil wouldn't be able to pay, the $4.99 that you pay in Germany. So by making that deal also with the rights holder, you actually find the right offer in the right markets. And otherwise, that's something they cannot pull off, right? They usually would buy somebody before bought by ESPN or something, and they would just amplify that via TV, not really targeting based on the data that we have about the user.
That's really interesting. Would you say then you're going into as much like distribution. So you're like doing the live streaming of games as well now. So that's maybe something which you didn't do before, but you're moving into that direction too.
Oh yeah, we've been moving into that like for like 3-4 years. It's just super difficult to get somebody, like, without like naming any rights holders, or like I don't want to piss anybody off, but to because also you take a chunk a little bit of their of their market, right? We are unbundling, right? You buy one specific match that you care about instead of like this big big segment that you usually have to pay for on a monthly basis. So but this also ties into OneFootball as a platform for creators. We also have the same kind of like RSS feed, or news that you can serve to your fans. Let's say you're somewhere in Germany, 4th League Sandhausen, you have a really, really good blog, you want to reach your audience, you don't know where they are. We know like who your followers are, so we create a environment where you can plug in your content into us, and whatever we monetize, you get a share back, right? And this is really also kind of like these parts that we're now moving into Web3, right? Like, or like what all of this is about, of like how is OneFootball kind of thinking about blockchain technology as an amplifier, or to make things future proof, that we're taking for granted now in Web2, and making it more appealing. But we can also talk about that in a second.
Yeah, for sure. Because I think one of the things, if you're listening closely, that the thing that you keep mentioning, which is really important to you, is you say things like, we know certain things. Like you're talking about data, you're talking about knowledge that other people don't have. And so you've got this data component, which is incredibly, incredibly valuable. And I guess that's how we lean into the Web3 side of things. Probably got a couple of questions. One on the on-chain pass, or like what you're maybe specifically building. But just before that then, so you've got this successful Web2 company. That's super interesting, going really well in the traditional sports media space. What is the difference then between OneFootball Club, between OneFootball, which is the Web2 company, and OneFootball Club, which is what you're attempting to build in Web3? Like, what's the difference there?
Yeah, no, that's a good question. So, I mean, what it is, the OneFootball Club, in simple terms, it's your user account that you already possess, enriched by a wallet, right? And that kind of like serves like as the anchor point for your fan identity. So you mentioned it really well. We know already all this data, and we know, but also on the other side, so much else of the football space is happening, in it, like outside of our ecosystem. And we thought about, why is your data so siloed off? You're a season ticket holder here, of I don't know, Chelsea, or you attended a match. All of these data points that are being collected are scattered somewhere around the world, and you never really own it. You never really benefit from it. To be honest, like we're, as the Web2 company, benefit from it at the moment. We want to kind of like turn this like on its head. Right. So what does it mean by what do I mean with that? So if I talk to the clubs as well, they take, any data point or behavioral data that they have about you as their kind of proprietary asset. Right. I don't want to share that with you because maybe my competitor, and maybe clubs are rivals. They say like, I want to treat this as my own asset and kind of leave this. We are proposing, building the open fan identity layer. And for that, we are using blockchain. Right, you're seeing a lot of moves into that direction at the moment. And so what we're really talking about is, for example, we have a user with a wallet. We give them a username which is called the .football ID. This works exactly like an ENS, right? So it actually just routes a readable name like Vince.football into my base wallet blockchain. And at the end of the day, what we are doing is, obviously with the user consent, saying, hey, let's start with badges, like you made the most predictions, or you logged in 365 days, or you're the quiz like wizard. So we bring these badges and we inscribe them onto your profile, and we invite anybody else in the ecosystem to build value on top of that. And I think the real power becomes like, that's why it's so powerful for OneFootball, is because we are reinventing ourselves as well. We are a media platform. I think, man, content is becoming a commodity. We see it with AI. Like at the end of the day, the Google search graph has become so powerful. I think, what has been always our biggest and prized possessions are our users and our community. And we want to make sure that we build something sustainable for these supporters in the long term. And the fan identity layer and really creating your reputation and your fan journey on OneFootball and taking it anywhere is where we see, a lot of potential. Because whatever you do in our ecosystem should also count in another ecosystem. And what you achieve through that is kind of like an interconnected experience, the same way we envisioned with the NFTs came out, right? Like token gated, man, I got this NFT, I got to go into this one group or not. And I love the idea about it, but I think the practicality of it, or in general, making this a reality has always been difficult. So just to tie this a little bit back into what is OneFootball Club, well, it's your user profile. It has a decentralized identifier, which is the .football ID. It has a wallet, a smart wallet that's embedded, zero friction onboarding. And then we have OneFootball heads, which you also see on my Xbase here, which is our PFP collection, which has been a great success in onboarding the Web2 audience at the moment. Just going to stop here really quick.
And I want to double down on a specific aspect. So you said that you explained very well the difference between the media company, between the club, the user account. In terms of, obviously, you basically did grow the media company before that and have your own share of success metrics, KPIs for measuring that. But looking specifically at the OneFootball Club side of things, how do you measure success there? Because you can imagine that being quite different from the quote unquote traditional business.
Yeah, I mean, what is most important to that, I think, there's three phases to the rollout of OneFootball Club and its success, if I would frame it that way. So we started a year ago with gamification and really adding, some more like playful, delightful things for our users. So they would come back into the app and they would be rewarded for their engagement, right? And ultimately, it led us into deciding like who is the biggest fan of, because we see it with your engagement. So by getting people who are usually coming into the OneFootball app, maybe consuming some content and leaving, getting them to engage more and find out more about the app because of gamification, like Duolingo did, or you know it from video games very well, was kind of like the first step. And we've seen a great success in that, right? The second phase, which we are in right now, is putting what works already and what we've proven and validated in the last year on chain, and make sure that this is already ready to kind of like live and branch out into different ecosystems. So the success here is really, and we are in the midst of putting the OneFootball Club accounts on chain, is how many users from our 34 million monthly active users can we move over and create a wallet for? Because that is kind of like the unlock for us to build the kind of like the next version of OneFootball Club on. And in that sense as well, it's a big onboarding play, but it's also a big partnership play in that sense. And the late stage of it, which is really focusing in H2 of this year, end of the year, is a social awareness layer. So whatever counts on my fan identity makes the most fun and is the coolest, if I see it against my friends. Right now we have like leaderboards to define who's the biggest fan of X of that club or whatever. But in the future, we want to be, maybe it's 11 friends, like we have small squads, creating micro communities and making sure that, your fandom is captured and kind of like put against your friends inside of this community. So the success of us measured in that point is to transform OneFootball of kind of a consumption platform to an interactive platform where community and engagement lives first, right? Because based on your interactions, based on your fan identity, let's even think about we will have an agent that creates the news stream for us. OneFootball will still have the context, right? We will still be relevant because of the community and the fan identity that we've built now in order to be ready of what's going to happen next, and especially for the younger generations, that want to be engaged more in a playful way than, strict up like reading an article and, maybe, just leaving the app.
Gotcha. And on the onboarding part, that's the thing I want to double down. When you say that you want to see how many of the 34 million users that you have, I think let me quickly remove him as a co-host. I can mute him 1 second. There we go. So you have the 34 million users. You want to onboard them to use the wallet. How do you think about that process, like from an educational standpoint? Do you want to tell them, hey, this is a wallet, this is blockchain, you're entering like quote unquote crypto territory? Do you not really want to explain that tech stack to them and it's just happening in the background? Where on that scale do you guys sit with the onboarding process?
Yeah, we actually went for the don't, emphasize too much on the technology. I mean, we come from a Web2 audience that, is already used to our app, used to the onboarding. So when we looked at how we're going to solve onboarding and make it worthwhile, is we took out of inspiration how Reddit did it. And I loved how they did it, right? They already had the established avatars. They said, hey, you can now store this. This is truly yours. It was around like this ownership narrative. And you just set a small check mark. A wallet was created for you in the background. You got your avatar in there, and they say, hey, this is your vault, where you can store your digital assets. I mean, they went away from this because of IPO and regulatory uncertainty during the IPO process, which I totally understand. But that's kind of like where we, took inspiration from. And when you think about it now, is OneFootball in its 17 years never had a username. So the .football ID is the first time that users can actually choose a username. And what will happen is I'll, do the registration, Google, Apple, log in with whatever you want, right? I choose a username, and in the bottom you will see something that we call the fan vault, right? And just by checking that box, an embedded wallet will be created for you on your behalf, and it will be attached to your social account. So it's a self-custodial wallet. And we do everything in the background to making this, making this wallet ready to be used. So in terms of friction there, it's very low. If you click on know more and education, then obviously you will be walked through what happens. And if you're a power user and you want to export your private keys, you can also do that within the settings, because again, we're really advocating for something open, right? We don't want to build another silo. I don't think that's going to work. What we're trying to build is the best possible fan standard, get clubs and everybody to, see like in an open source way, hey, that works. That's really cool. Let's contribute to that. And then hopefully, establish new standards that are open and anybody can build something on top of permissionless. So that's really the mission, because I see as well, you see other clubs moving into the direction. FC Barcelona just launched their Fan Pass product, which is a great validation, right? That they're moving into that. But also PSG is launching something on MatchChain, which is also an interesting play. What I just hope and what my wish is for all these projects, and I know confidentially that other clubs are also moving on chain, is that this is an open standard, right? And so we don't just build another like silo and we slap Web3 on it, because then nobody's winning. And we are just committed, to be, as open, and as composable as possible. So we all gonna, enjoy a unified fan journey that anybody can benefit from.
Yeah, that makes a ton of sense, and I think you probably have made that similar experience from the media side of things when you said you partnered with many football clubs and need to start with one, need to onboard the next one, and you also need to make sure that all are using the same network effects, the same standards, because otherwise it's going to be too fractionalized and it's not going to work out. Also, like the part you said you drew inspiration from Reddit. Reddit ultimately was extremely successful. Those who are not aware of that, with their collectible avatars, they sold more than 4 million of those. As you said, the reasons why they did shut it down had nothing to do with the collectibles being a failure, but more so with the regulatory side of things. However, we only have maybe a couple of minutes left in the interview.
Legendary, just by the way.
Oh,
I think I'm in the studio. You need to let me up.
Oh, you can't. Oh, sorry, you locked out.
Connections.
There you go. Welcome back.
There we go. Can you hear me? Okay.
Yeah.
You
strange computers. I don't know what was going on.
Yeah, you have a different camera as well.
Different camera, different computer. Had to completely change everything. But no, this is interesting. I'm listening with one microphone in the spaces. I heard all that conversation about the product. That's super interesting. I think the final thing we probably wanted to talk about was the raise stuff, right?
Exactly. So, do you want to take it, or because I was just about to pivot into that?
Oh, perfect. Go for it.
So on the raise side of things, you did announce a $50 million OFC token sale on Coinlist, $500 minimum investments, backing from Union Square Ventures, Dapper Labs, and Imoca brands. As you said, with the goal to onboard as many of the 34 million users that you guys already have to the Web3 side of things, to the wallet side of things. How much are you looking to raise in total? How's the raise going? Where do you plan to allocate those funds? Like, talk me through the strategy of the raise.
Cool. No, 100%. I mean, for those who are interested, so we are launching our own token, which is called the One Football Credits, the OFC. And it's really, for us to kind of like, tie together all the experiences that we have already on our ecosystem. So we've been talking about this for a long time. We looked at soft currencies, at One Football, the same as Duolingo has like small diamonds or whatever, right? Like for a long time. But also being backed by big names in the Web3 space, also with Animoca, like as you mentioned, Dapper Labs, but we have other, like really heavy hitters in our cap table as well, who think this can be one of the biggest like onboarding plays in terms of crypto be in the space. We're launching our own token, and I think one thing here maybe to really go back quickly to the offer. So first of all, partnering with Coinlist has been amazing. They've been really great partners and allowing us to host the public sale there. It is a 50 million FDV, right? And these are the best terms that any stakeholder gets, right? There's no like deals in the background or KOLs or anything, that have better terms than this. Me and my team really fought hard for this because we think it makes sense. And look, we all know how it is, right? Like, you get crazy valuations, expectations are super high, right? And then, you don't live up to that dream for whatever reason. It sets you up on a back foot. And we want to make sure that, we get like a fair launch where everybody, can come in. Not a meaning like fair launch in terms of sniping or anything, but using a good FDV. And what we also do is filling up from the bottom, right? So it means anybody who has an allocation, and you can start by $100, will be able to have an allocation, and then bigger tickets are filled, later. So it is live. We are the last 36 hours right now. It's going really, really well. I don't know. I think they allowed us. I don't know if we still have some open, but we also had an allowed us going for a couple of communities. But yeah, we are looking at a strong kind of like last 36 hours that we're heading towards. And we're super excited about this opportunity as well.
Sounds good. And I think that point about the terms, being transparent about those things is increasingly important in this environment where, it's hard. It's hard to push things sometimes when other people know that there are other people who are have significantly better terms than them. And I think the market in general is becoming more smart when it comes to that kind of stuff. So I think it's a nice decision that you've made there to make all the terms the same for all the participants, from what we understand. Maybe a final question then, like what's the upside here? I know there was a section in the document kind of talking to the upside. How would you want to package that for people?
I mean, the upside, maybe one more thing about what Legendary said, how will this be allocated? I mean, this is for us to build, what I, continuously building out what I've just talked about, right? When football as a big audience and already, an established product, like there's so many cool avenues that we're looking at. I mean, think about prediction markets, right? Like we are breaking the news. We have a Web3 enriched account, right? We will have our own token. So all of these, new endeavors that we look at, this is really what we will, use this for. And I think that's also great. I mean, obviously we always backed by the parent company, but it's also great, to make sure that we have firepower and to build, something quick and meaningful. In terms of the upside, I think if you really, think about the offer, but you also think about the user base that we bring, right? Like if you see how many people potentially, can touch this token, and then also in general, the distribution and the partnerships that we've lined up are super, super powerful for many, many don't know yet, something I forgot to mention is we have a big partnership with FIFA Rivals, like one of the most successful games out there when it comes to Web3. And what will happen is if you create a OneFootball a .football ID in our ecosystem, you go over to FIFA Rivals, it will actually travel with you, right? So we're working on an integration. And what I mean with that is when you are one of the most avid players or you open a pack or do something in FIFA Rivals, it will actually count also in OneFootball, really serving as the first proof point of your identity traveling with you. And our goal is to have as many of these partnerships, and not on a commercial base, but really as a win-win for all of us together. And at the end of the day, combining that with the broader reach like of our network, which is 200 million users, because we have a lot of amplifying content, so on and so forth. It is a very strong adoption play and distribution play. So I think there's a lot of upside there, and also being early on this, right? I mean, we'll have very cool ways to use the token because it's already there and already established, right? And there's also some things that are still in the pipeline and that we'll really reveal a little bit later. But for us, it's very exciting, and the token should also be seen as how we can reward and incentivize user behavior on our platform, because there is some really, really cool users on our platform that are that we also want to incentivize to make sure that they cut in the value creation.
One quick sentence to underline the significance of what you just said, the FIFA Rivals partnership. They launched less than 2 months ago, and yesterday had surpassed 1 million downloads, which is speaks a lot about the adoption that they're getting at the moment.
Interesting.
Yeah. No, just to add to that, I mean, it's been an amazing partnership with them. We helped them also, right, like to push for the first launch, and there might be maybe some closer integration coming very soon also to OneFootball, where you can move over into FIFA Rivals, so on and so forth. I mean, giving all of this, you guys can probably imagine, a partnership like that is for us long term and very important. And it also, again, helps us diversify into the future. And nothing cooler than when I do something at FIFA Rivals happens, I get a badge at OneFootball or vice versa. And I'm super excited also about the partnership and to take that into kind of like the next 6 months and building together.
Sounds very interesting. Vince, is there, we've kind of gone through all the topics today, just so people know, this is a multi-month partnership we have with OneFootball. OneFootball will be joining us, Vince will be joining us on a routine basis over the next few months. So we're going to see how this journey plays out. Very excited to find out more. Is there anything else like on the horizon that you're looking forward to most, just as we kind of close out here?
I mean, the sale is closing tomorrow, right? So as you can imagine, the last
focus is there for now.
Yeah, the focus is there. Last couple of weeks been very, very intense. So I'm also looking for like a day off on the weekend. No, but this is one milestone, and we're very excited, right? Like there's much more to come that we'll announce also after this. So we've been cooking this. I mean, it's going back 4 years, man. So seeing all of this materialize, being able to talk to you guys on the show is a big privilege. I mean, so I'm excited about, sharing more and really heating up the journey, right?
Looking forward to it. Best of luck with the rest of the raise. We'll be keeping an eye out, and, we'll be looking forward to hearing back from you in, the next time you join us to hear about the further development. Just for people who are interested to follow along, I've got a couple of links at the bottom of the document for you to share. We've got the OneFootball Club link, which you can see on screen now. And you've got Vince's. So just the handle there is, let me read it a bit better. We've got Vin040 _ before the V, and then OFC _ the _ club is the Web3 part of OneFootball, and then the main part of OneFootball is at OneFootball on Twitter as well. So you can keep tabs on what is going on in the world of biggest football media company around. Vince, it's been a pleasure to have you with us, man. Anything else you'd like to share before we close out?
No, thank you so much for the questions, and really appreciate you guys having me on the show.
Thanks so much for joining us. Just a reminder, guys, if you're joining us for the first time, we do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour. And sometimes we have top conversations like these. You can find us on live on X video, YouTube, and you can catch us on Apple and Spotify too. We'll be back same time, same place tomorrow. Thank you so much for joining us. Have a wonderful day. Take care, and we'll see you tomorrow. Bye-bye.
Thank you guys. Bye-bye.